This week, the Australian dollar traded from around 75.50 to above 77 cents. The biggest rally came after the FOMC released its statement and quarterly projection material. The Australian dollar rose over 1 cent to trade above 77 for the first time in 3 weeks. The Fed raised interest rates by 25 basis points, as widely expected and clearly flagged. They maintained their projection for a total of 3 hikes this year and a further 3 in 2018. Interest rate markets are pricing in only 1 or 2 more hikes this year, with a total of 3 by 2018. Markets seem to have been expecting even more optimism from the statement than the Fed delivered. The US dollar dropped against all major currencies, and US bond yields fell as well. This occurred even as other central banks keep monetary policy loose. The ECB, Bank of England, and Bank of Japan are all continuing with their quantitative easing or money printing programs. European politics also helped risk sentiment. There was an unusual degree of focus on the Dutch elections, which was seen as a bellwether for the French and German elections later this year. It was a victory for the more centrist parties. There were concerns as the far-right, nationalist, anti-EU party had been polling well early in the year. Domestic data was less positive. The biggest setback came with the labour force survey, released just hours after the Fed announcement. There were 6,400 fewer jobs than the previous month, and the 5.9% unemployment rate was the highest in 13 months. The number of hours worked was fewer month-on-month and year-on-year. The Westpac Consumer Sentiment Survey indicated slight gains overall, but the detail showed that respondents were very concerned with their own finances. This is in line with other reports of slow wages growth. The NAB Business Survey showed confidence and conditions easing from extreme highs but remaining strong. Market probability for a rate cut this year remains low, though chances of a hike have faded to below 20%. Westpac still expects the RBA to remain on hold through this year and next. It's a quiet week ahead on the data front, though we do hear from the RBA, with the meeting minutes out on Tuesday and 2 speeches from officials. In the US, we hear from FOMC members, including Chair Yellen. Commodity prices should remain supportive of the Aussie, especially given the rebound in iron ore prices. We expect the lower end of the range to be around 76 cents, and the Aussie should remain capped by recent data such as employment at around 77.50. We'll speak to you next week.